All right, let's get right into it. China's famous national spirit, Baijiu, is in some serious trouble. A new, incredibly strict government ban on alcohol is shaking the very foundations of an industry that, once looked absolutely untouchable. So the real question is, can it bounce back this time?
So here's the deal. In May of 2025, Beijing dropped the hammer with new regulations that basically forbid government staff from drinking on workdays and completely ban booze from official events. And let's be clear, this wasn't some gentle suggestion. It was a sweeping order, and the market felt it, well, instantly.
And when I say instantly, I mean a serious nosedive. The Baijiu fund, which is a really key way to track the industry's health, just plummeted. We're talking more than 12.5% down right from the start of the year. This wasn't a small dip. This was a clear signal that investors were panicking.
Which brings us to the core of this whole thing. Look, we've seen government crackdowns before, so is this just another bump in the road for Baijiu, something they'll get over? Or are we actually watching the beginning of a real long-term collapse?
To figure that out, we've actually got to rewind the clock a bit. We have to look back at the last time something like this happened, back in 2012. What happened then is absolutely crucial for understanding why today is so different.
Right, so back in 2012, the government came out with its 8-point regulation. It also went after official drinking, and just like today, it sparked a huge panic. Prices for the top shelf stuff like Motai completely cratered. But, and this is a huge but, as this quote points out, it didn't kill the industry, not even close.
In fact, what happened next was this incredible V-shaped recovery. Yeah, there were about 2 years of real pain, but then the industry adapted. The demand that disappeared from government parties, it was quickly filled by businesses and just regular people. By 2016, growth was absolutely exploding, and it all led to record-high stock prices in 2021.
And this table just perfectly illustrates how massive that boom was. I mean, look at these numbers. The big giant Motai between 2015 and 2019, revenue and profit both shot up over 160%. Another big player, Ye, saw its stock price more than quadruple. This history created this really powerful belief, this myth almost, that Baijiu always bounces back. But, and here is the major twist, that old playbook from 2012 just isn't going to work today. The entire world that Baijiu lives in has fundamentally, completely changed.
So what is so different? Well, it really boils down to 3 huge cracks in the foundation. You've got the whole industry shrinking, you've got fewer people wanting to drink it, and the competition is just brutal. Let's break each of those down. First, the industry itself. This chart is honestly staggering. Since 2016, the total amount of Baijiu actually being made in China has fallen by 2/3. They are literally producing so much less of it than they used to. So that leads to a pretty big paradox, right? If production is way down, how in the world did revenue and profits keep climbing until just recently? I mean, from 2019 to 2024, revenue was up 42% and profits jumped an insane 79%. How does that even work? Well, the answer is actually pretty simple. They just charged a whole lot more. The big, powerful brands jacked up their prices, and at the same time, tons of smaller, local brands just disappeared. They went out of business. So that growth wasn't about selling more stuff, it was about charging way more for less stuff as the big guys took over the whole market.
Okay, problem number 2, and this one is a doozy, the customers. Younger generations in China, they just aren't drinking Baijiu like their parents and grandparents did. Their tastes are different, they're more cautious about it, and that means the total number of potential drinkers is getting smaller and smaller, a trend that is really hard to fight.
So let's put it all side by side. The difference is stark. In 2012, when the government stopped buying, you had a growing base of regular people and businesses to pick up the slack. Today, both government and personal demand are under pressure. The customer base is shrinking, not growing. And the result of all that? Vicious price wars as companies fight over a much smaller piece of the pie. Okay, so things are looking pretty tough. I get it. But is it completely hopeless? Well, not necessarily. The industry does have a few ways it could go, but it's going to take some really dramatic changes in strategy. The analysis points to 3 potential lifelines. First, you could see a ton of mergers and acquisitions, the stronger companies just buying up the weaker ones. Second, they have to innovate, new products, better marketing, anything to get those younger drinkers interested. And third, and this one is so important, they have to start looking outside of China. And this is exactly why. Right now, the international market is less than 5% of the entire Baijiu industry. For years and years, the Chinese market was so profitable, they just didn't have to bother going global. But now, with the home market in trouble, that massive, untapped potential overseas might be their only real shot at growth.
So, let's bring it all home. What does this all mean if you're an investor? Well, the old logic of just buy Baijiu and hold on to it forever is officially dead. It is time for a brand new playbook.
The takeaway from the analysis is really stark. There's no ambiguity here. As a whole sector, the Baijiu industry just isn't the surefire investment it was for the past decade. The risks of the whole trend continuing downward are just too high. So here's the new 3-step approach. First, you've got to rethink the value of the whole industry. Buying a fund that covers the whole sector is pretty risky now. Second, you have to be super selective. Maybe you stick with the top dogs like Motai, but even then, it's probably smart to reduce how much you hold. And third, keep your eyes peeled for the innovators, the companies that are actually making smart acquisitions or, even better, successfully breaking into new countries.
Which leaves us with this one final big question. The domestic market that made Baijiu a global powerhouse is changing in a fundamental way. The industry is really at a crossroads. Its future, its very survival, might just depend entirely on whether it can transform itself from a Chinese icon into a truly global spirit.